That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply. And then there was the ETF.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto, Real Vision co-founder and CEO. Raoul Pal delves into the latest market action and offers his key insights on securing your financial future. Raoul explores the ever-changing landscape of tech investing, discussing the transformative impact of AI and the role of cryptocurrencies in shaping future wealth management strategies. According to Raoul Pal, we are currently experiencing a transition from the crypto macro spring to summer, which coincides with the US election cycle. This period is characterized by an influx of liquidity into the system, likely due to politicians offering incentives during election time. Additionally, the Bitcoin halving event has reduced the supply of Bitcoin. Furthermore, the introduction of the ETF has created a perfect setup with increased liquidity, new demand, and reduced supply. As a result, the outlook for the rest of the year remains positive, and Raoul Pal maintains a bullish stance for this year and most of next year. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
So listen, what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply. And then there was the ETF. So basically, we've got a perfect setup of liquidity, plus new demand, plus reduced supply. And so the rest of the year should play out the same way. I mean, I continue to be very bullish this year and very bullish for most of next year. Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year. So it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm of Bitcoin itself halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading.
Well, I mean, speak for yourself. I stare at my Bitcoin once every 5 seconds, just so you know, okay? And I've slowed it down from once every 2.5 seconds. But go ahead. Keep going. You're doing beautifully.
So that mechanism is driving the valuation up of Bitcoin over time. Now, It also means that people start to see this asset going up because there's less supply and lots of demand, and it joins more and more people. Because this asset is the best performing asset in all recorded human history. Bitcoin itself has done 20 million% since 2012. It has produced 150% annualized returns since 2012. Ethereum has done, which is another cryptocurrency, about 170%, and Solana 190% or 200%. So this asset is by far and away the greatest performing asset in all of humanity.
Bitcoin has reached new all-time highs in 2024 and has experienced several recoveries above $70,000. However, these price movements have not resulted in a significant overall trend. Instead, BTC has been hovering around its 2021 cycle high for approximately 4 weeks. Independent trader and crypto analysts suggest that based on historical price action, the largest cryptocurrency may continue to trade within a specific range for the next 1 or 2 months before showing any clear direction. According to Dan Cryptrades, in previous cycles, it typically took Bitcoin 4 to 8 weeks of consolidation around its previous cycle highs before resuming its upward movement. This happened after it retreated from its all-time highs at $73,345 and reached $80,000. The current sideways movement of Bitcoin coincides with a significant shift in BTC holdings. The number of wallets transferring BTC from known exchanges to private custody has more than doubled, going from 12,152 wallets to 26,627 between March 31st and April 4th. This increase in BTC withdrawals from exchanges is in line with a surge in whale activity during the same period, indicating a trend of accumulation by large investors. Whales are typically entities that possess over 1,000 BTC. Let's back to the Raoul Pal interview.
The real reason, forget all of the complexity of what this is and the technology, forget all of that. Think of why most people have bought gold: to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story. Is why does nobody feel as wealthy as they thought they should be? You know, particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring. And we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo market, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protector for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, you have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement. Yep. Inflation is not the only, that only captures a small part. It's the actual debasement of currency that makes assets look like they're going up. So the Venezuelan stock market, if you ever see a chart, looks like it goes vertical. It looks like the best performing stock market in the world.
Right, of course.
When you put it in Venezuelan bolivars, it's down 90%.
Right.
It's because they've been devaluing the bolivar.
So let's put the U.S. stock market. You don't have to give me the exact number, but I know you're a macro guy. So the U.S. stock market in Bitcoin has done what?
Down 99.97% since 2012. The
Since
NASDAQ,
Bitcoin
99 point... Yeah, since 2012. Not even since Bitcoin started.
Right, so
the every single asset on Earth versus Bitcoin since 2012 is down 99.9%.
In a recent interview with CNBC, Cathie Wood, the CEO of ARK Invest, discussed the reasons behind the rise of Bitcoin. According to Wood, Bitcoin is seen as a safe haven against the devaluation of fiat currencies. She also mentioned that Bitcoin serves as both a risk-on and risk-off investment. While the introduction of the United States' new ETF has contributed to the mainstream narrative around Bitcoin, Wood believes there is another important factor at play. She pointed out that while institutions are gaining exposure to BTC, regular citizens are presented with an even more significant opportunity. Wood emphasized that there are currency devaluations happening worldwide that are not being widely discussed. She sees this as a flight to safety, a hedge against devaluation, and a loss of purchasing power and wealth. The interview also discussed the previous year's US, the regional banking crisis, and the Greek financial crisis of 2013 have contributed to the rise in BTC price. It seems that this is seen as an insurance policy against oppressive regimes or ineffective fiscal and monetary policies. Wood reached a conclusion. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.